Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your daily technical analysis of foreign exchange markets. I'll start with the euro-dollar. A combined counter-to-the-counter key reversal up and bullish engulfing pattern yesterday, if only just on the latter. Once again, the market only just made it over the short moving average, currently at 116.04, and the November 2020 low at 116.02. Closing over it once more, if only just. Overall, we are still in the follow-on lower from the recent cat's ears pattern formed over July to September, plus the more recent weekly key reversal down made last week. In the cat's ears pattern, the neckline is made up from the combination of the 38.2% Fibonacci line of the March 2020 to January 2021 move at 116.94, and a neckline, currently 116.81, of the August to September 2020 head and shoulders top. Plus now we've also got the declining short medium moving average, currently 116.88, interfering. For the cat's ears pattern, we still have a potential target X below in the 114.5 area. The key to achieving this target will be the market maintaining itself below the break line above, or lines if you like above in this case. All this comes in the shadow of September's monthly key reversal down. Looking at the even bigger picture, we are still nicely moving down in between the upper time, currently 117.32, and the middle time, currently 113.61, of the January to May bearish Andrews pitchfork. This pitchfork has run the whole of 2021's action. So far today, a reactionary move lower once more. We're well on our way to making a third countering action right now, consisting of a bearish engulfing pattern, if only just, and possibly a reactionary key reversal down as well. We're now below the limited support from the 2019 high at 115.70 and looking intently at the recent low at 115.22. Cable, aka sterling against the US dollar. A bullish engulfing pattern yesterday and the second part of a possible pipe bottom. The market once again pushed up and closed over, if only just, the broken lower time, currently 136.75, of the July to date broken sideways triangle. Interestingly, this pattern's impact is now greatly reduced, and I suspect it may have been the overhead sidelining short medium moving average, currently at 137.09, which capped the rise. A little further up, we have the slowly declining medium moving average resistance, currently at 137.64. Now this latest pullback up now really threatens a number of targets below for the sideways triangle. The market had already achieved the initial target X below in the 134.90 area, but the secondary target in the 132.65 area looks quite distant. And as I've often stated, harder to reach, so perhaps just reaching the original target X may have been enough. Well, we'll see. But I'm actually thinking at the moment of retiring target X1. Finally, I've droned on interminably about the longer term whole of the 2021 double top pattern, Adam and Eve type. I thought it was becoming more obscure as time moved on, and prices didn't. However, the late September to early October move down had revitalized the idea enough that I'd placed some potential targets for this pattern. An initial target X2 in the 133.60 area and a secondary target X3 in the 131.10 area. With early October's move up, this big pattern still is, under threat. Despite recent actions, I still suspect I may soon be contemplating targets on the upside, whether for the sideways triangle or for something else. Well, that last bit I'm still unsure of, and we'll see. So far today, a small peak higher, then back down below the trend line for the sideways triangle, and another move towards a recent low, thus potentially obliterating the nascent pipe bottom built up over the past 2 days. Euro sterling. A reactionary key reversal down yesterday, prompted I suspect by the market's close proximity to both the declining short medium moving average, currently 85.24, and the nearby slowly declining medium moving average, currently 85.33, and the market's lack of desire to challenge these two resistances. Prices halted at the old March low, 84.70. Now further below, we still have the declining support from the old upper channel line, currently 83.99, with a broken May to August bear channel. Now this somewhat unusual support had been enough to halt the decline since last September. So far today, a test of support 84.70, that has been breached, but still is managing to hold up, if only just. US dollar against the Indian rupee. A fourth bearish black crow yesterday and a continued follow-on from Monday's immediate countering bearish dark cloud cover pattern. Prices punched down through and closed below the 50% Fibonacci line of the April 2020 to February 2021 move at 74.63. The market finally halted at the broken downtrend and trendline combination of the April 2020 to date move, currently at 74.36, which makes up the large April 2020 to date sideways triangle. This triangle, broken on the way up, originally gave an initial topside target X in the 76.36 area and a secondary target in the 77.79 area. These were based on two big assumptions. Firstly, that the break higher up and away from the sideways triangle was not a false break. Secondly, that the hesitation we'd seen since mid-October may be a type of bull flag or bullish halfway hesitation type sort of situation. These are big assumptions, and it very much looks as if these assumptions may be false. Watch this space on these. Just below the broken downtrend trend line action of the right, and also we have the rising medium, just below that broken downtrend trend line, we have the rising medium moving and short medium moving averages, currently 74.30 and 74.22 respectively, plus the 50% Fibonacci line of the February to April 2020 move at 74.26. So far today, well, the market's punched a hole back into the old sideways triangle. However, the eroding effect of both the medium and the short medium moving average, as well as the 50% Fibonacci line, have all sapped the bearish energy today, and prices have moved back up to around their close last night. Shades of a possible indecisive doji cross for today right now. US dollar against the Brazilian real. A huge key reversal down and bearish long black Marobozo yesterday. This coming after Tuesday's public holiday and with Monday being the only other working day of this week. It was nevertheless enough of a move that not only did prices plunge back into the original breached upper time, currently at 566.15 of the late July to late August bullish shift pitchfork, but also managed to punch out below and close under the nascent early September to date bull channel, currently 558.31 to 587.34. And that seemed to be taking the running higher at a more acute angle. Now, I pondered last time whether to retire this pitchfork. Not so now, it stays. Additionally, the move lower was enough that it now threatens a potential weekly key reversal down for this week. So, if prices manage to fall below 553.5 between now and Friday's close, and then close below 563.70 on Friday night, then we'll be on for a weekly key reversal down. That's definitely something to keep an eye on. US dollar against the Mexican peso. A huge key reversal down yesterday that made a new recent high not seen since March, over the significant 38.2% Fibonacci line of the 2018-2020 move at 20.9039. The move lower punched down and closed clear below the 50% Fibonacci line for the whole of the 2021 move at 20.5849. This was also a strong counter to last week's weekly key reversal up, and has shelved, at least for now, further ideas for the September to date action being a bullish halfway hesitation, and instead has raised to the fore that the action since September may be a large topping action. It has also halted, at least for now, ideas of reaching the secondary target X1 in the 21-23.5 area. This was the secondary target, secondary topside target for the June to date descending triangle, one usually hard to reach. Plus, we've also already reached the primary target X in the 20.8920 area. Now, to counter this bearishness, you should be aware that the market will need to do a hell of a lot more work on the downside to negate last week's weekly key reversal up. In fact, you have to see threats made to the upper trend line or the recent broken descending triangle, currently at 20.1146, plus a mess of Fibonacci of moving averages in between, to even get my attention on that. This is the thing to remember. All the bearish action yesterday and any going into further will be in the shadow of the weekly key reversal up made last week. Thus, this is one to watch. Now, so far today, a reactionary attempt higher up to the 50% Fibonacci line at 20.58.49 and a 38.2% Fibonacci line at 20.60.62. The rise was based off of yesterday's low in the 20.5 area. However, the early attempt higher has not managed to push up through the overhead resistances, and we're back down around yesterday's close. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.